Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. All we ask in return, please refer a friend. Today is Thursday, May 23rd, 2013. We'll be looking at some various long-term market charts for some positions we already have open, and it's one or two that we actually want to open a position on the short side. So this is important. Remember, whenever you're looking at, and you should do at least once a week, analyze your long-term charts for various reasons. Number one being that there's more data in the long-term chart, and therefore the charts are more trustworthy. When they become overbought, it's more of a sell signal than when a short-term chart becomes overbought. So that's important as well. For example, if you were to have a bullish condition on a long-term chart and a bearish condition on a short-term chart, you want to trust the longer-term chart versus the short-term chart. In the current case, we have sell conditions on both charts, and that's that much more important to us. But looking right now at the Australia market, the AORD, you can see that we've had this massive move to the upside here. That was great. Then we come up here, we peak out, and we pull back very shallow. Whenever you have a situation where you've advanced substantially and then you get a very shallow pullback, you expect the following rally to be short-lived. It will be another basically duplicate this little move here this way, and that's what happens. We test the high, we get higher, but we roll over anyway. It's basically a shooting star followed the overall pattern of just double top. So we come over, hit it, and bounce off. We hit it again, we roll over again. Bearish divergence formation, high point here, lower high still. So we're just moving lower on the momentum. So we can't expect market prices to continue to move higher in that environment. Your momentum is failing, and you're going lower. So your momentum to the downside is increasing. Well, that means price is going to start to follow in that direction. So I've been looking to take out this low here. We have a big move still coming yet. Just from a technical perspective, assuming there was no news that was bad or anything like that, I would look for this move here to be within the world of normal. That would just be a normal chart activity. If we get bad news or something that we hadn't anticipated, some kind of black swan or something like that, well, I could see a move much, much bigger. But right now, just looking at the chart, you should be looking for a pullback just from basic technicals. One last item that confirms the same overall story. If we move down and look at the MACD on that particular chart, you can see you've got the high point here on the red line, and then the lower high here is also confirming your bearish divergence. You've also already had your bearish cross formation here where the signal line crosses below the red and the moving average there. So all these things are telling you to look for a rollover of the market as well. The long-term Dow Jones Industrial Average 2-year weekly chart, you can see we have massive move to the upsides going back from November, and we haven't had a pullback. So no matter how you want to look at this, whether you look at it from this point in November or you look at it from this point here on the start of 2013, you've had a straight up move here and it's not had any kind of a pullback. That's just not sustainable. So you can start looking for signs to indicate when you're topping. That would be the obvious one. Would be looking for the bearish divergence formation, and this makes it really easy. When you have momentum, come up here and hit that 90 line. Once that's happened, it's near impossible. I won't say it's impossible, but it's near impossible to form anything other than a bearish divergence, because you've peaked out, you've hit an all-time massive high there, and then every move thereafter is going to start to fail, like you're seeing here. So we start to form this bearish divergence. You don't start selling as soon as the bearish divergence forms. You wait for some kind of a sign of breaking down, that kind of thing. We've seen that in the short-term chart, and that's why I've marked the chart on if you go to the website at PerfectStockAlert.com, it's a free site. You can see the short-term and long-term charts, and you'll see that the short-term charts show where I would be entering as well as where I'd set my stop at. All those things are starting to show that we're breaking down there, and that's important. The longer-term picture here shows a typical move here would be 50% correction from what you've already done. So you just make this move here and pull back. That's normal. And then you do this, and then what do you expect? A pullback. That's what you should be looking for. You're bouncing off of that upper Bollinger Band line. All these things cannot be sustained forever, so be looking for that sell opportunity. The Hong Kong Hang Seng Index really being drugged down by China's news we had today. What was that? Showing some contraction in their manufacturer. That's not even the first piece of bad news we've got out of that, and we've already heard that they're less likely. They've already said they're not looking to increase their stimulus. They'd rather use some other measure than to try to inflate the market, and that's I believe it's the right thing to do, but it's giving the market plenty of room to move to the downside short term. So right now we're looking at this chart saying you should be looking for a top. You already have this high point here, lower high here. This is confirmed by the high point here, and then a lower high here. This is a series of lower highs. Next thing you would expect is lower lows. That makes a lot of sense to me, but again, that means that all of this move here has not been tested, so you have this little short, weak pullback here, you make a weak move higher, and now you get the rest of the pullback. Just from a technical perspective, that where nothing goes wrong. Okay, that's important to note. If something were to go wrong, you could do a lot of other things, but right now I'm just looking for this right here to be an obvious, clear move lower, so I'll be looking for a short entry opportunities on that. Looking now at the India Bombay Stock Exchange, or the BSE, this is one we're also short on the short-term charts. You can check out my stop loss limits where I would mark that and so forth and so on. And the basic overall story is the same. You had a massive move coming up here. We broke through that uptrend line. I warn, whenever that happens, you're topping. Whether you can make a higher high or not, you're still topping. Then you get the various divergence formation here and here, and this tells you that all of this is unsustainable, this rally right here. It breaks down, and you take out this low point. Now you come up here, and you make a higher high, so you get conflicting signals. You're getting this lower series of lows and higher series of highs, and as we've mentioned before, whenever that's happening, all it's really telling you is sideways moving market. Well, if you can think about it, and you say, all right, well, we were down here at this low point, we rally, then we get a sideways moving activity. What's happening? Well, you're either forming consolidation, which this is not, and I'll show you why I know that in a moment, but or you are rolling over, and that's what we're happening here. If you were consolidating, it wouldn't do this. You would see something like this. You would see a move like this, tight formation. This is consolidation. When you have higher highs and lower lows, you're seeing it start to lose its composure and start to fall apart. And that is what's topping here, and that's important. You know, we're already short this, and you can look at the short-term charts on the website. Quick glance here at the Japan markets, the EWJ. This is one of these charts that I've been monitoring for a while here. We have this massive uptrend line here, big move going on, and today we had a 1,100 point sell-off in Nikkei. That's a massive move to the downside, but it's nothing in comparison to what it's actually due. And we can see this develop for a while. I expect that this little rally you saw short term on the chart, that you will continue to see that as we start to come up here and test this previous high. That would make sense to me. But again, I want to point out, bouncing off the 90 line, anything that you do from this point on, it's going to form bearish divergence, and it's going to be a massive one after a massive rally. So this is, again, something I want to be looking for a short entry opportunity into. Keep an eye on this one. Looking now at the London Financial Times Index, or the FTSE, this is one we were able to get a short position on as of today's trading activity. You can see that we have this massive move here, same time period that we saw from all the other global markets taking off. You can see we rallied substantially here. Then we did something different. We closed below that uptrend line. When you do that, I've already mentioned, a long-term uptrend line like this, very strong, but when you close below it, you're starting to indicate something. Even if you make higher highs, you're showing you're starting to fail here. You're starting to lose that support, that momentum. And then you come up here, and now that support is now acting. You had support from here, here, and then here. Then you close below it. Now you're getting resistance at that line. That's important. Also, you're getting the sell signal, but the week's not really over, so I can't really call it just a sell signal just yet. The main thing here, again, will be the bearish divergence. Bounces off the 90 line. Anything you do at that point is going to just give you a bearish divergence in most cases. So here you are, lower high, lower high. All you're doing is saying any move higher than this point here, corresponding time period, any move higher than this is just unsustainable. You should be looking for a sell opportunity in that environment, and that's what we've done. Looking now at the Russell 2000 Small Cap Index long-term chart, same basic overall story. Had a nice move from the start or the end of 2012. Made a nice move finding support at this area here, and again here, and then we closed below it. At that point, we warned you that your trend has just changed. You don't know it yet, but it's changing in front of you. You now come up here, you test this previous support, and now you're finding resistance, and that's very important. Also, at the same time period, note the high point of the ultimate oscillator indicating momentum at 90. Anything you do from that point on just forms a bearish divergence, and that's exactly what you see. So you should be looking for sell opportunities here. I mentioned yesterday that I want to be looking for a good sell opportunity, but I was going to use options instead of trying to find an individual company pulled from the Russell 2000 Small Cap Index. There's various different ways you can do it. You could use inverse ETFs. You could do all kinds of things. But I mentioned I was going to be looking at using puts on the FAS, and that's actually, I in fact meant IWM. That would be for the Russell, okay? In case you guys were wondering. I'm sure you guys understood what it meant, but whenever I talk fast, I think slow, and that's what happens. Okay. And right now, looking for a short opportunity on this makes a lot of sense. Massive move to the upside, no real correction. Again, a little weak pullback here, a little weak move here. You should find a top. That makes sense. Quick glance here at the S&P 500 Large Cap Index. Same basic overall story. The reason why I would look to the Russell for my short opportunity rather than the SPX, would be that the S&P is going to be stronger, more diversified in the sense that they're globally and things of that nature. So they're larger companies. They're stronger than your smaller caps, and that's why I'm focusing more on the smaller caps on the sell side. But the same basic overall condition, high point off the 90 line, then everything from that point on just tells you that this is a bearish divergence. You should be looking for an entry opportunity on the sell side. This entire move will be erased. You've never actually broken this uptrend line yet, so that's important to note. Also, you're seeing a very massive move to the upside here, but again, every move eventually has a correction, so keep that in mind. At some point, you should either be advancing your stops or looking for short opportunities, and at least in this case, you should be advancing your stops. You've had a massive rally here, so much larger than anything you've seen prior, so keep that in mind. But at this point in time, I'm not looking to short here. Looking lastly at the EMW, the Wilshire 4500, again, let me point out when I just said looking at the S&P 500 that I'm not looking to short there. It doesn't mean I'm not looking for sell opportunities and that kind of thing. That's fine. But where I'm personally looking is for more volatility. And that's, again, why I'm looking at the Russell 2000. If you can't trade the Russell, the EMW is very similar from a chart perspective, and it makes a lot of sense there to just simply trade out the one for the other. You're going to get the same results, basically. In this particular case here, looking at the ultimate oscillator, same overall condition, bearish divergence formation after hitting the 90 line. Everything you do from that point on, you're just not going to take that out. So it's going to form that bearish divergence. That makes a lot of sense. Therefore, after you have seen that develop, you don't just start selling because you get that. You start looking for breakdown situations, and you see this uptrend line breaking down. That's fine. That's what you would expect to find. Then she turns around, she makes a higher high. It doesn't change anything. I've already shown you on several other charts over the past several weeks that whenever you've broken that uptrend line, that's it. You should be looking for a top, especially when you have the bearish divergence formation already in place. And so again, I'd be looking for sell opportunities here as well. For those of you who'd be looking for the short-term charts, my entry opportunity, stop loss limits, things like that, how I would mark them, I update those charts every single night right here under the market charts section. Both the short-term and those long-term charts that I've just shown you are there, and as well as several others that are setting up opportunities. So you can check them out there. You can come to the free website at perfectstockalert.com. It's 100% free, and all we ask in return, please refer a friend. God bless, take care, and I'll see you in Friday's market announcement video. Please take a moment to review our disclaimer. The information provided herein is our opinion only. Under no circumstances do any statements here represent a recommendation to buy or sell securities or make any kind of an investment. You are responsible for your own due diligence. To summarize, we do not provide investment advice, nor do we make any claims or promises that any information here will lead to a profit, loss, or any other result. These videos are for educational purposes only.